Welcome to the Finance Forum. I'm Abdu-Raof Hanslo. In this evening's program, we touch on something that affects all our lives. All of us have gone through theft, the loss of items, and various different events through our life, which we required cover for. This evening's program is about short-term insurance, and I'm joined in studio by now my very good friend and a regular on the Finance Forum, Mr. Etienne Wilsnach from Alchemy Financial Services. Good evening to you, Etienne. How are you?
Good evening, Abdu-Raof. I'm very well, thank you.
You know, the topic, when I read the brief of the topic that you sent me, I thought to myself, this is something that touches all of us. We all experience loss in life. We all experience various different obstacles that cross our pathway through our lives. And if it's not for that short-term insurance, then we would basically be worse off. But this evening's program is basically about insurance in general, and attached to that, obviously, short-term insurance. Etienne, so to kick it off, if you could basically give us a brief synopsis of the difference between short-term insurance and long-term insurance. I know the name's different, but if you could basically give us a synopsis, the difference between the two.
Yeah, incredible question. And you're right, more people probably have touched on their short-term portfolio than their long-term. So it's a more common product. And I'm glad we have the opportunity to discuss that. There's a big difference. So when people talk about short-term insurance, they often get confused with the term of an investment. Say, but hang on, is unit trust a short-term product? If I do a 5-year investment or a tax-free savings plan, is that short-term? No, that's not. Okay, so if we're going to follow strict theory, short-term refers to the insurance of a non-human object. Your car, your cell phone, your bicycle, your home, your business premises, your delivery vehicle. It's non-human, and long-term refers to human beings. So in theory, when we speak about long-term insurance or the Long-Term Insurance Act, we talk about the insuring of a human being, of a person or multiple persons. When we talk about short-term, that's generally referring to the insurance of a material item. And that's the massive distinction. So within long-term, we might have short-term products that refers to term, how long we're investing, but that's not deemed as a short-term product.
Now, Etienne, I mean, you're speaking to my viewers, and my viewers, basically, they're a community that's not very accommodating, number one, to insurance. And I think my viewers, there's a thin line for whether it's compliant according to their beliefs or not. But here we have a scenario whereby you have a product that can cover so much. Why is it so important to have this type of insurance?
Okay, so we can talk about the belief system, and we can talk about religion as a barrier often to accepting it. The reality is that, in my interpretation of that, is generally there shouldn't be gain, there shouldn't be financial gain. Yeah. Short-term insurance doesn't create, or should never create, financial gain. It should protect your asset. And the general question your audience should be asking is, I've purchased a car, in simple form. I've purchased a car for 50,000 Rand, and I financed it at the bank, and I still owe the bank 40,000 Rand after my deposit. And the question should be, if I lost that motor vehicle through theft, through fire, through an accident, can I afford to replace it and still owe the bank 40,000 Rand? And if the question is, that's going to be a problem, then you have to have a look at it. That's really, it's as simple as that. I look at the cost of cell phones at the moment. If you've just purchased a new telephone at the cost of 8,000 Rand, and you say, you know what, it's being funded over a period of 2 years. If I lost this phone today, somebody steals my phone, I probably couldn't afford to buy another one. I don't have access to 8,000 Rand or 7,500 Rand. Then, spend the small premium, a fraction of that, and insure the item. So if you do lose it, there'll be an instant replacement from your insurer. And that's the simple form. If you cannot afford to lose that asset, if it's your home, if your home is gutted in a fire today, can you afford to rebuild one? And if the answer is no, I won't have access to a bond or to no more finance, I don't have that type of liquidity, then insure it, because the premium of insuring it is a fraction of what it would cost you to replace it.
Now you've given us basically the importance of having it. I think the next question is, are there any products that, or is there any anything else one could do if you're not covered by a short-term insurance? So is there anything else I could do in that space, in form of savings or anything like that, if I'm not covered by short-term insurance?
Yeah, so we would refer to that in our industry as you carrying the risk yourself.
Yeah.
So that's a formula. So if I own a motor vehicle and the vehicle's only worth 10,000 rand, but my insurance is going to cost me 500 rand a month, then I can say, hang on, if I saved that 500 rand for 2 years, that's 12,000 rand. I've exceeded the value of the car. I'm prepared to carry the risk. So if I lose that car at the end of year 1, I only owe 4,000. I only lose 4,000. The offset of that is, I could have saved that with the premium. So in that's a term called carrying the risk. So in other words, I carry the risk of losing the item, and if I do, it's not going to destroy me financially. It's not going to be a financial setback that would cause harm to my family. And that's the determining factor. If you're saying, hang on, it's 50,000 rand, then you've got to say, I need to make a plan. Okay, so yes, there is the option of carrying the risk, and so often brokers won't share that with you. Okay, but it is a basic formula. So if I'm saying I'm at the last 6 months of my cell phone and I'm going to have a renewal of my contract in January, if I lose it now, I can borrow a phone from somebody for 6 months. I can carry the risk of losing that item. Then it's fine. But that's a mathematical question.
I think also the important thing to say is, if one's purchasing a brand new car, or even a second-hand car through a dealership, and you're taking out finance on that vehicle, the first thing they want to see before pulling that vehicle off the showroom floor is a proof that the vehicle is insured before leaving the premises. And I think that's basically just to safeguard the bank,
yes,
who holds the title to the vehicle. However, thereafter, one can do as you please, and one could lose it. But your explanation of the importance of this very important part of financial planning is so vital to the prospect of safeguarding our assets. Now, Etienne, you spoke earlier about brokers, and when I think of a financial advisor or financial planner, I'm always thinking about investments, I'm always thinking about life insurance, and I'm thinking about my financial plan. However, I think I'm one of those people, one of many, that don't consider the short-term insurance part of it as being part of my financial plan and part of my advice that I receive from a financial advisor or financial planner. From your perspective, how important a role does a financial planner or financial advisor play in the process of procuring short-term insurance for assets?
Yeah. So I'm going to take that twofold. Personally, I often feel, and this is a personal view, that my short-term broker and my long-term broker is not the same person.
Okay.
I don't use the same person. I've been with a young man by the name of Chris for 23 years, and he takes care of all of my short-term stuff, my commercial, and we'll go into that later. And then I have a dedicated area for my long-term. So somebody that looks after my life and my investments, and I've separated them, and often because I believe that they're both specialized.
Yeah.
And you know what? If you're going to see a specialist for a heart condition, you're not going to see your GP.
No, of course not.
You're going to see a cardiovascular specialist. If you're going to see an eye surgeon, you're not going to go see. Your GP will refer you.
Yeah.
And it's the same theory for me personally. So I believe, first step, dedicate and make sure that you've got everything in place. So we also see the market is at the moment very active with this call direct type of people. So one of the concerns there again is the claims experience, and also, are you sure that you're dotting all the I's and crossing the T's? Are you sure that every aspect of your assets is being covered, and that there's a personal conversation around, how important is that watch to you? Is it a legacy? Your car, is there detail attached to it? The problem with that often is that you purchased it on the phone because you're premium sensitive, but when it comes to the claims experience, that's when the trouble starts. But your question is, how important is the short term? I've seen families destroyed because they didn't attend to it. So having the conversation around, I've purchased a car, often the dealers in the bank would ensure that you get short-term cover in place because there's a financing option. So what if I bought the car cash for 300,000 Rand? Okay, they're not going to force you to do that. But I have seen so many examples where somebody drives out of the driveway, and within that first 12 hours of owning the new car, it gets trashed, and he didn't insure it. Okay, so me personally, if I've purchased any vehicle or any asset of that nature, I have it insured before I take the key. Even if it's a day before, that's fine. But I never risk it. I've seen people in my industry that have gone through a transition period, for example, and they've cancelled with one insurer and joined a new one, and in that month they weren't covered, and Murphy would have it. That in that month your car was stolen. So imagine this legacy. You still owe 170,000 Rand on the last car. You've got to go and fund a new one, but you're going to pay the bank that 170 you owe them for the next 5 years. Okay, but you've got nothing. There's no asset for it. There's no return on it. It's money one way. And that purely because for one moment of your life you didn't put that short-term product in place. So you don't want to pay the 375 Rand cover for 1 month, and you could end up paying 170,000 Rand back for the rest of your life. And it's as critical as not having life cover. When it comes to bigger assets like your home, that can be tricky, because what if you lost your home? Okay, and it's going to cost you 1.2 million Rand to replace. And now we're not talking content and all of the other stuff.
We're talking about structure.
And often people just overlook that until the inevitable happens.
Now, Etienne, I think the one thing that we all know, and we see it so often, in fact, we see it on a daily basis on the television, where there's an advert of where you could call directly into a company and get cover through these various companies. I think the question, my previous question was aimed basically at the role of the financial advisor in that whole process, and what it takes to find the correct cover and the one that suits your need. So in that regard, I'm not going to ask you the question, which is better, the direct insurer or going through the financial advisor. But from the Finance Forum, we're always propagating fit and proper advice. And fit and proper advice to me means sitting down with a financial plan and looking at your risk analysis, looking at all those various different aspects of your life before deciding on a product that suits your need best. Does that apply to short-term insurance as well?
For me personally, absolutely. There's no right or wrong. I mean, I need your audience need to, in my comment now, I'm not saying one is better than the other one or one is right or wrong. It's based on personal preference, your preference. Mine always is, I want that personal touch. If I've lost my car, or if I've lost my phone, or somebody had broken into I want to be able to phone Chris. He's on my speed dial and say, Chris, there's been a traumatic event in my life. There was potential losses. There's a loss of income. There needs to be a claims process. I'm going to go to the SAPS and I'll get you the case number. Can you process the claim for me? If you're going to deal with a call center personally, that will be absent. And in light of that, it's not a preference for me. And the bit of advice I want to give your audience, this whole idea of you get your premium backs after 5 years. I've got to ask the question: am I taking my short-term cover as a savings plan because I want money back in 5 years, or am I taking it to protect my assets? That if I have a claim, the honourable payment of that claim and the ease of the claim is relevant. That's important to me. Not if I want to save money, I'll speak to my long-term broker and I'll take out a tax-free saving and I'll take in an endowment and I'll invest in unit trust. I don't want to use my short-term to save money. We need to caution against that. But you do not be price sensitive on your short-term cover. Look at the claims experience. if I'm going to have a claim tomorrow, okay, how easily is that going to be processed? With what degree of ease, and how personal is that experience going to be to me? That for me has always been the deciding factor, and I've not deviated. I've been with the same short-term practice for 23 years. Okay, now it's simple. My office, my wife, they all know Chris, not personally, but if I have a claims experience, Chris's PA Luna calls me, says, Etienne, here's the forms, please complete it, send it back to me, and the rest is taken care of. It's a seamless experience, and that's what I'm prepared to pay for.
Now Etienne, early on you mentioned about you took a scenario into account of a guy who owns a car that might be worth 10,000 Rand, and your insurance might cost more than a premium on a 10,000 Rand car. In the event of that type of scenario, you might own a car that you could easily replace by yourself, but we're all not the best drivers in the world. And what types of cover do you get? The question I'm basically asking is, can I then, instead of protecting my own vehicle that's valueless, that I can replace at any given time,
yes,
but can I protect the other user on the road from my negligent driving?
Absolutely, yes. So there's two types of product in the short-term space. One is called full comprehensive, which is your standard product. It covers your car and repairs, and you can add your phone and your watch and your laptop to all of that. But there's a nice product called third-party fire and theft, which is a very affordable product that says, do you know what, I cannot afford the full comprehensive cover, but I do if I'm driving into Abdu-Raof's X5, by accident, and he was stationary and it was my fault, and I potentially face a lawsuit or legal action that could bring a lot of discomfort to my family, I can protect that third party. Okay, so if I have had an accident and they will not repair my car, but the insurer will at least repair the vehicle of the third party. So there is that product, and it's very affordable. It's not an expensive product, and it would talk to the same reality. I've got a car, it's not worth much, and if I lost it, I'm not prepared to insure it. But if I do drive into somebody else, will they be covered? And then the third party fire and theft option would definitely be available.
Now Etienne, we always hear people speaking about their businesses and speaking about various different aspects of their lives. And the first thing, if I walk into Canal Walk, for example, as a shopping mall, and I go into one of the jewelers, in doing a quick calculation in that store, the value basically of the items in that store would run up into quite a few million Rand. And at any given time, if that business is hit in any way, that's a huge loss. Now, is that cover that a business would take out different to a cover that a person in your personal capacity would take out? And are the risks higher, and are the premiums higher? So I think basically, if you could give us some light on that.
It's an exceptional question, and I'm going to deviate from the Canal Walk scenario because I want to talk to your members. I want to talk to your viewers and say, if you're running a small business, okay, and you have a bakkie and you're a tiler, and you're using your bakkie for the delivery of your tiles and your staff, and you have that insured under personal lines, and you have an incident at one of your construction sites, there's a strong possibility that the insurer will not honor that claim because you've insured it as personal lines, not commercial. So that's very distinct. There's commercial insurance, which relates to businesses. Any item, vehicle, premises that was used for the generation of an income is deemed a commercial property. Personal lines is items used for personal use. They are distinctly different. Their premiums are different. The way the claims are processed are different, and the way the claims are viewed is distinctly different. So you'd often get somebody that says, I had a minibus and I took kids to and from school in the afternoon, and when an accident they didn't pay. But they would often find it was because when the incident was reported, said there were 12 school kids in it, and it was used for commercial use. It was used for the generation of an income for the family, but it was insured under personal lines. The insurer is not obligated to honor that claim.
Now, Etienne, that's one mistake that's made commonly, I would presume, that people don't insure the items correctly,
Yes.
or under the correct banner, put it that way. What are the other common mistakes that people make when looking at short-term insurance?
Okay, so there was that, and non-disclosure quite often. People think, I use it now and then. It's generally used for private use, but occasionally I take the kids to school. You need to assess that and disclose that to your broker. Okay. The other ones would be not properly secured. So they hadn't disclosed that there's no burglar bars, or there's no linked alarms. Yeah, I had an alarm, but you know what? What was the requirements in the small print of your contract?
Yeah.
Did it refer to? So go to your broker and say, what are my security requirements? What are the minimum requirements linked to this contract? Did it say there needs to be burglar and a linked alarm, or must all opening doors be secured with a trelly door? What are the requirements? So when you do experience a claim, you're not going to end up with no claim being honored because you didn't read the fine print. Okay, there's something called access. What is my access? Is it 5,000 rand? Is it 2,500? If I'm self-employed, do I get a courtesy vehicle while my car's being repaired? And that's the part that the broker is critical, because you need to ask him. But the most common mistake is not securing your property. And then when you do have a claim, the company says, but sir, your contract said that all opening windows had burglar bars. There weren't any, sir. And then, this company is crap and they didn't pay. It's the contract. You didn't read it. Please make sure that your contract stipulates what is required as a minimum security requirement for you to qualify for a claim. And never, ever miss a premium. Because Murphy has it. That 1 month you try to save 300 rand. Your car's stolen.
I know that we have, our community is very fond of cutting back when times are tough, and the first thing to go would be the short-term insurance.
Should be DSTV.
It should be DSTV. And I think you've just pointed it out so nicely, that the importance of this product is so vital to our peace of mind when going forward. Etienne, we're almost running out of time, but there's one last question I want to ask you, and this is something that we hear of quite often, and that's personal liability insurance. So can you just give us a brief synopsis of exactly what personal liability insurance is?
Very inexpensive product. So I own a hair salon, and somebody walks into my hair salon on my tile floor, and there was shampoo lying, and she slips and she breaks her neck. Okay, that incident happened on my premises. Even my private premise doesn't have to be my place of employ. That person has a claim because the incident occurred on your premises. The reality is it's probably one of the cheapest products available to you. So look at it in your if you have got short-term products, just check it with your broker. Do I have some public liability, especially if it's a place of employ? If somebody gets injured in my premises for any reason, and they submit a claim against me in my person, will my short-term product cover me?
Okay, and Etienne, as far as advice to our viewers are concerned concerning short-term insurance, what advice do you have to part to them?
Don't underestimate the need for it, because it could destroy you. There could be years of discomfort if you didn't have it in place. And please don't be premium focused. Don't go for cheap. Okay, go for affordable, but ensure that the claims experience is going to be a good one. So when you choose one, don't choose hype. Don't go according to the color. Look at the claims experience and say, if I'm going to have an incident, I'm paying you my 500 rand a month. If I have an incident, are you going to honor my claim? That's the most important part of choosing the right company.
You've been watching the Finance Forum with myself, Abdu-Raof Hanslo, and we've been speaking short-term insurance. I thank my very learned guest in studio today, Mr. Etienne Wilsnach from Alchemy Financial Services, for pointing out the importance of this very vital product that we should have in our lives. The pitfalls that could befall us if we don't have this type of product could be disastrous to our finances and our way of life. So in future, as always, we propagate that you seek financial advice from an accredited and registered financial advisor to look into this product and to choose the correct cover. Until next time, stay focused to your finances.